Welcome to the Deep Dive. Today we're zeroing in on TAV Airports. They're a major international player in airport terminal operations.
That's right.
We've got their first quarter 2025 investor presentation, the document confirming that date, and also their Q1 review briefing.
Mm-hmm.
Our goal here is really to pull out the crucial insights, into their current performance and where they might be heading, give you a clear understanding without drowning you in data.
Exactly. We're not just reciting figures. It's more about connecting the dots, yeah. Revealing the sort of underlying story of TAV Airports right now and their future prospects.
Okay, so let's unpack this. TAV Airports, it sounds like they operate on a truly international scale.
Yeah.
Can you maybe paint a picture of their reach for us?
Yeah, their footprint, it's pretty significant, spanning 8 countries currently. Turkey, Kazakhstan, Georgia, Tunisia, North Macedonia, Saudi Arabia, Croatia, and Latvia.
8 countries. Wow.
And directly, they have stakes in 15 airports across those nations. So this geographical spread, it can be a real strategic plus,
Yep.
Sort of buffers them against regional economic ups and downs.
15 airports. That's quite a portfolio. Could you maybe highlight some of the key locations?
Sure. So in Turkey, their home market, they fully own important ones like Ankara, Esenboga, Izmir, Adnan Menderes, Gazipasa, Alanya, Milas Bodrum, and a big 50% stake in Antalya.
Antalya, right. Key tourist hub.
Definitely. And internationally, you've got major holdings like Almaty in Kazakhstan, that's 85%, Tbilisi in Georgia, 80%, Medina in Saudi Arabia, about 26%. These are really key hubs in their areas.
Got it. And it's not just the terminals themselves they handle, is it? I think I saw something about like a range of service companies.
Precisely. Yeah, beyond the core airport infrastructure, TAV has this whole suite of service businesses. You've got major ground handling through Havis and TGS, duty-free operations with ATU, food and beverage, that's BTA, IT solutions from TAV Technologies, security under TAV Security, and those premium lounge services, TAV OS. So this diversification, it helps their overall revenue streams and, creates synergies within the whole aviation setup.
Right, a really integrated approach then. Now, the investor presentation, it seemed to stress some key investment highlights. What sort of stood out for you there?
Well, a few things were pretty noteworthy. First, the strong focus on Turkey's rapidly growing aviation market. That's compelling.
Okay.
You see these ambitious fleet growth plans from local airlines, especially Turkish Airlines, aiming to nearly double its fleet by 2033. That points strongly to, sustained future demand.
Yeah, nearly double. That's huge.
It is, and that positions TAV as a leading airport operator there to really capitalize on that growth.
Makes sense. That fleet expansion really suggests a confident outlook for Turkish aviation.
It does. And TAV reinforces its position, too. They're number 2 for terminal operations in Turkey and number 1 in international origin and destination traffic.
Right.
They also highlighted their impressive historical growth. Get this, a 17% compound annual growth rate in EBITDA between 2006 and 2024.
17%
Yeah.
CAGR. Over that long.
Yeah. Pretty consistent growth over a long stretch. It signals a robust underlying business model that's weathered different economic cycles. That's a key indicator for investors looking long term.
That kind of sustained EBITDA growth, it really speaks volumes about their resilience, doesn't it? They also mentioned a sort of dual strategy, organic and inorganic growth.
Exactly. Yeah, that tells you they're not just looking to expand and improve their existing airports, but they're also actively hunting for new opportunities, maybe acquisitions or partnerships, to stretch their global reach and service offerings even further.
Okay, so that's the broader picture. Let's zoom in a bit on their performance, specifically Q1 2025. What were the key financial results?
Okay, passengers. They reported a 4% year-on-year increase. Total 17.8 million passengers.
4% overall. How did international versus domestic break down?
International saw slightly higher growth, up 5%, while domestic was up 4%. Revenue, though, had a more substantial jump, up 18% to $378.5 million. So strong top-line momentum there.
An 18% revenue increase.
Yeah,
That's certainly impressive. What were the main things driving that growth?
Several factors. They mentioned positive impacts from price adjustments, better performance from their service businesses, the opening of new commercial areas at Almaty Airport, and kicking off that new IT project from TAV Technologies in Qatar.
Ah, Qatar. That sounds like a pretty significant win for their tech division.
Yeah, strategically important hub.
So how did this revenue growth translate into profitability? What did the EBITDA look like?
Right, so EBITDA saw a 5% increase, reaching $90.1 million. However, the EBITDA margin did see a bit of a decrease. It went from 26.8% in Q1 last year down to 23.8% this period.
Okay, so EBITDA dollars grew, but the margin itself tightened a bit. What's the explanation they gave for that?
They put it down to a few things. One was a TAV tech project that had a lower profit margin than their usual operations.
Okay.
Another was an accounting thing from Q1 2024. They recovered some assets they'd previously written off, which made the comparison base higher this year.
Right, that makes sense.
And also the ongoing effects of Turkish lira inflation on their costs.
That context definitely helps explain the margin dynamics. Now, looking further down, the bottom line. Net profit after minority interest. That showed quite a significant decrease, didn't it? Went into a loss.
Yes, that's right. Net profit after minority interest dropped to a loss of $45.6 million. That's compared to a profit of $8.9 million in Q1 last year. But, and this is crucial, they explained it as mostly non-cash effects below EBITDA in low season.
Okay, non-cash effects. Like what specifically?
Primarily deferred tax losses,
Yeah.
both in Antalya and in their consolidated figures, and also foreign exchange losses.
So it sounds like these are mainly accounting adjustments and currency movements, not necessarily immediate cash flowing out the door, impacting core operations.
Precisely. Deferred tax losses, I mean, they happen when a company has losses it can use to lower future tax bills. So while it hits the current net profit figure, it's not cash out now and can actually be beneficial later.
Right.
And foreign exchange losses, well, they're real, but tied to market movements. They don't always reflect how the actual airports are performing day to day.
Got it. And what about that key metric for airport retail spend per passenger? Any movement there?
Yeah, for duty-free specifically, the spend per passenger actually increased by 4%, up to 8.9.
Oh, interesting.
Yeah, it suggests that even with potential economic pressures, passengers using duty-free are, on average, spending a bit more. That's a positive sign for the retail side.
Definitely a good sign for that revenue stream.
Yeah.
Okay, let's shift to operational highlights. How did traffic actually perform at the different airports? Sounds like there was some variation.
Indeed. Several airports saw really robust passenger growth in Q1. Izmir was up 6%, Ankara 5%. Almaty had strong growth at 7%. Georgia was impressive, up 15%.
15% in Georgia.
Yeah. Medina up 8%, and Tunisia saw a really notable jump, 31%. These numbers really highlight the sort of diverse growth drivers across their different locations.
Really strong numbers in several key spots, but I did notice Antalya showed a decrease in passengers.
Yes, Antalya was down 7%. However, the presentation makes a point of saying that Q1 isn't really representative for them, especially because of the timing of Easter this year.
Ah, the Easter effect.
Exactly. Antalya is a huge leisure destination, so its traffic is really heavily skewed towards the peak seasons.
That makes sense. Seasonality is crucial for places like that. And speaking of Antalya, there was some pretty big news about new terminal capacity opening up there.
Absolutely. Huge news. The new terminals at Antalya Airport started operations on April 12, 2025. That's a massive development for TAV.
How big an expansion are we talking?
It significantly boosts capacity. Initially, to 65 million passengers a year, with potential to go beyond 80 million later.
Wow, 65 to potentially 80 million. That's a huge increase. It really underlines Antalya's importance as a flagship asset for them.
Totally.
What other improvements came with this expansion?
It's pretty comprehensive. A much larger terminal area, obviously.
Yeah.
More passenger bridges and gates, so smoother boarding. Expanded aircraft parking stands and apron areas for, more efficient ground operations.
Okay.
And, crucially, a massive increase, 165% in the commercial area.
165% more commercial space. That could really lead to a substantial boost in their non-aeronautical revenues, things like shops and restaurants.
Exactly. Huge potential there.
What about Ankara? Were the investments there wrapping up too?
Yeah, investments at Ankara Esenboga were almost done at the end of March, 99% complete. That includes a new runway, a new multi-story car park, and installing solar panels, too, for sustainable energy.
Solar panels, good to see.
They expect finalization in Q2 2025.
And I think I read there's also a new concession agreement that started in Ankara.
Correct. The new concession for Ankara Esenboga began in May 2025. It's expected to be more profitable for TAV.
Why more profitable?
Mainly due to a revised fee structure, higher rates, and also the end of the previous traffic guarantee setup. Plus, a change in accounting treatment for these infrastructure concessions, known as IFRIC 12.
IFRIC 12. Sounds technical.
It basically relates to how they recognize revenue from these long-term concessions. Ending the old guarantee and changing this accounting should lead to a, let's say, more direct reflection of the airport's actual profitability in their books.
Okay, so a clearer, more favorable financial setup in Ankara going forward.
Yeah.
Let's pivot a bit to their overall financial health and their outlook for the rest of 2025.
Right. So their net debt was pretty stable compared to the end of last year. And it's worth highlighting again that a big chunk of their 2024 revenue, about 75%, was either generated in or indexed to hard currencies like the euro and US dollar or pegged to the dollar.
Right. That provides a good natural hedge against local currency swings, doesn't it?
Exactly. Gives them a significant level of financial stability.
But what's their guidance look like for the full year 2025?
Okay, their projections. Revenue between $1.75 billion and $1.85 billion. Total passengers, they're aiming for 110 to 120 million. EBITDA expected between 520 million and 590 million.
Solid numbers.
Yeah. And their target net debt to EBITDA ratio is set between 2.5 and 3.0s. They're also planning capital expenditure, CapEx, of 140 to 160 million for the year, but that's excluding the ongoing big investment plan for Almaty Airport.
Okay, so continued growth expected across the board, plus ongoing strategic investment. They also mentioned some other interesting strategic developments.
Yes, a couple things. One was issuing that $400 million euro bond back in December 2023. That likely gives them financial flexibility for future investments or, refinancing.
Right.
And their service businesses are pushing ahead, too. ATU, the duty-free arm, started operations in Almaty and, significantly, got selected as the next duty-free operator for the newly expanded Antalya Airport.
So they won the contract for the new Antalya space.
Yeah.
That's big.
Yeah, it really underscores the strength and growth potential of those service divisions.
And their lounge business, TAVOS, that seems to be spreading its wings globally, too.
Indeed. End of 2024, TAVOS was running 87 lounges in 20 countries.
87 lounges.
And recently, they opened a new joint venture lounge with Turkish Airlines at Narita in Japan. That was February 2025. And they're expecting to open a new Capital One lounge at JFK in New York later this year.
JFK, too. So clear strategy to grow their lounge presence internationally.
Definitely. Diversifying their revenue streams further.
Now, something that's increasingly important everywhere is sustainability. What's TAV Airport's approach here?
Yeah, it's clearly a priority. They've set some pretty ambitious targets, carbon neutrality by 2030 for certain airports, and net zero emissions across all their operated airports by 2050.
Net zero by 2050, okay.
They're active in the airport carbon accreditation program, and they're investing in green initiatives like those solar panels we mentioned and other energy-efficient systems across their airports.
Important long-term commitments. The presentation also touched on how they manage currency exposure and their link to inflation.
Right. So currency risk, they manage it actively using derivative contracts and also trying to match their expenses with the currency of their contracts where they can.
Standard practice, but important.
Yeah. And they provided a sensitivity analysis showing potential impacts if the euro strengthens or weakens against the dollar and the Turkish lira. For inflation, a significant part of TAV's revenue is actually linked to it.
How so?
Through regulated airport charges, which often adjust with inflation, and also through turnover-based parts of their retail lease agreements. So that gives them a degree of built-in protection against rising costs.
Okay, that makes sense. Right, we've covered a lot of ground in this deep dive. What would you say are the sort of most critical takeaways for our listeners?
Well, I think the key things are TAV Airports is showing strong top-line growth, a pretty resilient business model overall, helped by that geographic diversity and the growing contribution from their service businesses.
Right.
While that Q1 net profit took a hit from non-cash items, the underlying operations look solid, and their guidance for the rest of the year points upwards. And those big strategic investments, especially Antalya and Ankara, plus the growth in international traffic and their hard currency revenues, it all positions them pretty well for, continued expansion and success in this global aviation market.
Yeah, and here's where it gets really interesting, I think. That sheer scale of the Antalya expansion, potentially over 80 million passengers, and that massive jump in commercial space, it just screams future potential for significantly higher retail earnings.
Right.
Really highlights how vital that asset is.
Absolutely. Huge potential.
And then you add the fact that Turkish Airlines plans to nearly double its fleet by 2033. That's just such a powerful indicator for the long-term growth prospects in the Turkish market, which is, TAV's home turf.
Yeah.
Put those two together. It suggests a really promising outlook.
Couldn't agree more. Those elements definitely paint a compelling picture of potential future growth and increased profitability for TAV.
So what does this all mean for you, the listener?
Yeah.
Well, whether you follow the aviation industry closely or you're analyzing financial performance, or maybe just curious about how global infrastructure works, this deep dive into TAV Airports offers, I think, a really valuable snapshot of a major player.
Yeah.
They're strategically investing, operating in a dynamic market, and they've got a clear focus on growth, but also, as we heard, sustainability.
And that actually raises a really crucial question for you to think about. Given TAV's big global footprint and their stated commitment to sustainability, how might that inherent tension, between the expected growth in air travel and the urgent need to meet environmental targets, how might that actually shape the future of airport infrastructure and operations?
Good question.
What sort of innovative solutions or maybe strategic trade-offs might be needed to, reconcile these two priorities that seem to be pulling in different directions? It's a complex challenge, really, with big implications for the whole aviation sector.
Some truly thought-provoking points there to mull over. Thanks for joining us for this deep dive.
My pleasure.
Until our next exploration.